Hello there. Welcome to my YouTube channel. I'm Dana, and if it is your first time to visit this channel, I warmly welcome you very much, and I'll be very happy if you can subscribe to this channel so that you can come back later and find the channel, learn more, and equip yourself on your trading journey. Today I'm gonna teach you a strategy that I've been using for some years, and it's very simple. Okay, and I'm not gonna talk a lot of things. We're going straight to the charts because you can check on your screen. You can see have put volatility 251S index. Basically, if it's your first time to see this, don't be shocked. It's in the markets. So this is volatility indices. Okay, often people call them, people have different names, the synthetic indices, volatility indices. Basically, these are artificial financial instruments designed to, simulate real market behavior, but without being tied to, actual economic events like stocks, currencies, commodities. Okay? They're just mimicking the market. Okay? The randomness and the movement of real markets. Some things you have to know about this market is that they are not affected by news. Yeah, they're not affected by news, all those stuffs. One thing I like about this market, is a 24-hour market. You can still trade it on Saturdays, Sunday. It depends on you. Now, probably you've been trading for a long time, you've been trying many things, trying to use indicators, you've tried many things. I got you. I'm gonna teach you some strategies that I use. Basically, everything I'm doing is based on naked charts, okay? I do not use indicators, I love using, price action. Yeah, because it's good. So one thing you have to know if you want to make some good money in trading, number one, you have to, reduce the risk appetite, okay? And you don't need to risk all of your account. Just grow slowly, compounding your account. Within no time, you'll be somewhere, okay? But first thing first, you're gonna have to have the knowledge. For me, knowledge is everything, okay? People can take anything that belongs to you, whatever, but nobody can take away your knowledge. Your knowledge is your life, okay? So invest in getting the knowledge, the right knowledge about these markets, and just know these markets are not going anywhere, all right? So without wasting much time, I'm going to take you through with some few examples on how I trade. Remember, disclaimer, I'm not a financial advisor. I'm just teaching you. I'm just showing you how I trade. If you see it's good, you can try using it. It's okay, right? Now, something else you have to know about this market is a 24-hour thing. You can trade in time. But of course, as a good trader, you don't just wake up and trade carelessly, okay? You have to observe the market, study it, and then you can execute. All right? Now, look, I know you're wondering why my chart has, black candles and blue candles. People are different. There are those who are not comfortable with the red and green candlesticks. Still fine. You can choose whichever color you want, okay? But for me, I just want to use these colors, all right? Let's go straight to the charts. I show you how I trade. Let me remove all these things. Number one, if you want to be able to at least get some good moves, it's always advisable you start with the high time frame. Okay? Start with the high time frame so that you can go down. All right? Don't focus on small time frames, yet you don't know what's happening in the larger time frame. Now, let's try and analyze this market, some few examples. This volatility 25-1S, of course there are many. There is volatility 10-1S, 25-1S, 50-51S, 75, and so forth. Okay? Now, I'm not going to waste any time. So I'm just going to take you through some simple steps that I use. Okay? Some very simple steps that I use. So let us start by marking our territory, marking, the chart. So you can see, if I start from this left, this is a 4 time frame. If I start there, I'm marking the highest point, right? Excuse me. And then I'm marking also the lowest point, all right? The highest point, the lowest point, because the market came down like this, then it bounced back. So you can see this is my lowest point, okay? Now I've marked my market. Now is to, I'm using high time frame, 4 time frame. So where am I focused on, right? Where am I focused on? Right now, my focus is where would I go next? Will it go up? Will it go down? I do not know. But the key reason as to why I'm teaching you this is to help us to be able to predict using the data we have where the market will probably go, right? Just go with me step by step. Now, we have marked our market. Don't be in a rush. Just mark your market. You can see the high point, the low point, the blah, blah, like that. Now, for example, you will want to know, okay, what caused this market? I'm just giving some few examples. You'll want to know, this market came down like this. It was selling. What happened? What caused this market to go like this? Then we're going to have to depend on the data behind, all right? Now, let's go step by step. Let's check. We have some different points, okay? This was a high point. This, okay, this is a low point. This low point caused this high point. This high point caused this low point. But inside this zone, something was happening. And that's where we're interested to check. I want us to try and analyze that point. What caused the market to change from going down and started moving in like this? If I was to trade during this time, was I going to get a trade? Let's try and check. Let's check together. Okay? Now, look at this. I want us to analyze. I'm going to use different examples. Do not worry. I'm going to check here. If I was trading in this level, would I have gotten a trade? Right? Now, I will take my levels. I'll mark, okay, this is a high point. It's a high point for me for this time. And this, let me just remove this. This was my low point at this time. Okay, your work is to mark the points first. And there's something that happened. Of course, I was going down. And you know the rules of setting. I was going down like this. Then I went up. For a continuation, I'm expecting this market to go down. But wait a minute. Something happened here. And what is that? The market changed direction. I'm going to use as many examples as possible. And then you tell me, we'll see how you can execute this trade. Now, let us now go deeper. After marking our points, we want to know, where can we get a trade? And when you use what you call price action, you know you have to mark high, low, okay? Lower high, lower low, lower high, lower low, like that. Now, this was my highest point. And this is my lowest point. But something happened here. Something happened here. Instead, I always like calling this line my money line. Okay? This market was going very well, like that, up, going down. So I was expecting when it comes here, I was expecting it to continue, a continuation. But there was some shift there. Okay? Now, that is where I'm really, really interested with that reaction in the market. Very interested in that reaction in the market. Now, since it did not go down, instead it went up, this candle changed the game. It closed above this level. So, meaning what? There is some change of direction. And therefore, how can I benefit from that? How can I trade in such a scenario? Okay? Now, if I see that, I will know there'll be a probability of me to do what? To buy. Okay? But these are short buys because remember, we are dealing with the market inside this line where we drew. Okay? We should not go above this point. We should try and check how we can exit the market quite early. Now, the market, just hold on. So right now, we can see how the movement is, the path. The market down, went like that, went up, I'm trying to draw a path for us to see. The market went like that. Then dropped. Then went up. So went up. And then, surprisingly, it did not come down the way I was expecting it to do. It did not come down. It did not go down the way I was expecting for a continuation. Instead, there was something that happened here. And that is what we call, change of direction. And that is where we need to capitalize our, how we can get inside the market. You see that? So now, we come and realize that inside this place, this market, when it went up like this, we can see we have a zone here, our liquidity. Okay? Our liquidity is right there. So the market went up. The market went up. The market went up. Then it came down. So how will I know where I'll be entering the market? Definitely at this level of my liquidity, all right? And where will be my take profit? I'll always take my TP at the next liquidity level, where I can see a mini liquidity, depends on how you call it, this point. So remember, these are 4-hour time frame. So now I've been able to get to grasp all of this trade. Look at this. From here, I've been able to enter this trade, be able to get that profit. Isn't that amazing? Look at that risk to reward. Very clean trade. You can still use Fibonacci. You can take the lowest point and where the market turned. Then you can look at the 79 level right here. Right here. And simply enter your market and get your take profit. So remember, your main goal is to try and understand as much price action as possible. Okay? As much price action as possible. Now, let's try and check up here. There are many examples up there. There is price action, but I want a simple one that you can easily understand. Easily understand, okay? Price action. Yeah, here it is. I'm trying to look for easy ones. The one you can check. Look at this market. Look at this market. Look at this market. This market. Let's try and check this. This market was moving down. But all of a sudden, the market moved up. So as a trader, you want to catch this move as early as possible. If you use your indicators, they really lag. But now, my question is this. What am I supposed to do so that I can catch a good move there? I'm going to use another example, right? I'm going to use another example. Of course, we know how we have been doing from the previous example. You have to mark your levels. You mark. You say, okay, this is my highest level. This is my highest point, all right? And this is my lowest point. So where am I supposed to focus on? I'll be focusing inside this, between these two lines, okay? That's how you can trade easily so that you don't get confused, okay? If you draw, you're able to check well how the market has been moving, what, okay? Now, we zoom in like this. We can come and check, okay, the market was doing well. It was going pretty well. It was causing some highs. It was causing that high cost came down until to this low. Let me change to black colors because of my money line. This low caused this high. This high caused this low. But something happened. The market, instead of going somewhere and then coming down, it shifted, it went up. Okay? So, for you, what you need to know as a trader is never chase the market. Just trade what you see, all right? Trade what you see. Don't force the market. So now, this becomes my money line. The green one, because the candle crossed, and you see, the candle crossed this line, which means what? It changed the way the market was going. High, low, instead of another high, lower high, and then continuing, it changed. So that is where, as a trader, you need to be, that's a point of interest to all of us. Very, very key point of interest, and that is where now the knowledge of price action comes in. I'm trying to use simple terms as possible. Number one, what did I show you? If you see that, you know that is a change of direction. What are you going to do? You're going to have to wait for the market to go somewhere until it's tired and then it starts falling down. So you have to know where is this market coming to, where it's coming to exhaust to. And I said, you can come up with a simple way of using your Fibonacci, okay? You can pull your Fibonacci, okay? You can decide to put it down here to the highest point where it started turning. And you can see where between this zone, where this is where you're supposed to enter, okay? This zone, you can see we have some liquidity there. But let me give you a good secret. If you want to enter wealth using this zone, you need to go to a smaller time frame and see and start hunting for what? For price action. Smaller time frame, let me click 30 so that we can hunt for what? For price action, because we know we're supposed to do what? We know that we're supposed to buy, but now we need to hunt for that to get the price action. Now, excuse me, let me try and minimize this. Look, this is where we are. This is where we are. Remember the larger time frame? So yes, you know, inside this box, it is where you'll be looking for your buys. But you need to go to a smaller time frame. Yes, for the 4 hours, it's good you have been doing all those things. But if you want to execute your trades in a good way, after having a high time frame price action, the same way, go to smaller time frame and use the same way. Look for price action with the smallest, find the smallest details. That is where you get your money. I mean, that is where you gotta catch a good move and make your money. Now look at this. Very easy. If I go to 30 minutes, I can see this is my low, this is a high, okay? This is a low. Let me put a good color that you're able to see. Let me try to reduce this. That's a low. That low caused this high. Try and draw like this so that you can see. Yes, let me use red so that you can see well. Caused that high. And then this high caused another low point. Okay? This low point, we were expecting the market to come somewhere. We were expecting the market to come somewhere around here. You expect the market to come somewhere around here, then it drops, it continues. But now, it's confirming with what we were expecting from the high time frame. Now this line changes to become a money line. Why? Because these candles breached. So therefore, I will not enter the market immediately. No. I'll be waiting for this point to cool down and to come and confirm to my Fibonacci level. And that is where I'll enter my trade. So I pull up my Fibonacci. I put up to the highest point where it went to come back. And this becomes my entry level. This point becomes my entry level. This point becomes my entry level. So if I enter there, where is my take profit? Remember, we were using the high time frame. Where is my take profit? I'll always go to where I do my 4-hour Fibonacci. And of course, because I'm a conservative trader, I'm not going to target the highest point. No. I'm going to target where there is my favorable gap or my liquidity. So this becomes my safe zone. I don't chase the markets until the end. I like being conservative. So that becomes my exit point. So what? All of this becomes my profit. All of that becomes my profit. Don't struggling, don't force anything. If it doesn't work, you drop it. All of this becomes my profit. Have you seen that secret? You start with a high time frame. Look at that. Up to this point, I don't want to overdo these things. No. I don't want to overdo anything. I do not want to overdo anything. That becomes the trade of the day. All of that without even struggling. Start with a high time frame, like that, as you come down. So thank you so much, wonderful people. Thank you for sticking around. It's always good you learn step by step. So I'll be making more videos. I'll be repeating the same strategy because that's all that I use. And you know very well that out of 20 trades, at least you should get like 12, 13 right. That will compensate other trades that you may not get them right, okay? So we are here to make sure that we get the highest number of trades in the right way, all right? So see you next time. I'll be making more and more videos. I request you to come next time. Let's learn more. Let's learn together until you get this thing to your fingertips. See you next time. Take care. Bye-bye.